All right. Good morning, everyone. Good morning, good morning, good morning. Welcome back, guys. Welcome back. Happy Wednesday, guys. Let me make sure you guys can hear me all good. Good morning, guys. Good morning. Asia with the move on gold, guys. Asia with the move. Look at this for an incredible move on Goldie the past day since we jumped on. Very, very, very big moves in the markets. Big moves in the markets. Audio and video good, awesome. Thank you, man. Welcome back, everyone. If you guys are new here, welcome. My name is Aaron, also known as Aaron Trades. Been trading for the past 8 years and mainly focus on gold futures here in the European session. We'll look at all markets this morning, guys. Gold ended up playing out perfectly yesterday. Well, not perfectly, but it ended up hitting our liquidity levels. You guys remember yesterday I said in London that I didn't really want to short gold because you had this perfect trend line coming up. Well, you ended up selling all the way back off. You came down into previous day lows, perfect morning star bounce, and then Asia, and you guys got the fun, which is, yeah, really unfortunate for me because I didn't trade Asia. But for you Asia guys, it was a great Asian session today. Like that was just an amazing move. We talked about this in the Asia market call. We're just buying gold in Asia all day long. And that was a great move. Absolutely amazing move. I'm actually up 700 ticks. Stop sleeping. I know, very expensive sleep. Very expensive sleep. That's it's the whole move that I wanted yesterday. Unfortunately came overnight, which, it is what it is. It is what it is. I would have absolutely have loved to have been in it. Mostly slow borer markets. Which markets are you trading, man? This is amazing. From a VP, Volpro Edge Body. How was here, man? What's going on? What up? What up? Yeah, this is a great move up. This is an amazing move on gold. It's just so clean. Like I say, it's very unfortunate for us London traders because this is the whole entire move that we spoke about yesterday. But for you guys who are trading Asia, yeah, you guys had amazing opportunities today. Amazing. Yeah, caught it all on the Asia call. Yeah, nice guys in the Asia live stream today took the longs. Where did you guys take it from? Did you take it from? Oh, look at that perfect hourly morning star play. Asia boys are on the beach now. Yeah, didn't leave much for the London sleepers. Yeah, you guys are done for the day, done for the week. See you guys next week. Did you guys take it from here, like this? That morning star? Is that the one you guys took in Asia? That hourly morning star, 30 minutes, a little bit. This kind of looks like the setup from the other day, Sean. This looks pretty much like the same setup from the other day where, you know, the 30-minute close back below, you would have maybe closed the trade, but hourly ended up taking from this one, like that. Both are absolutely valid. Both are absolutely valid. Huge push. I do still like gold longs today. Asia gang, yeah, amazing. You guys took it, nice, amazing, great job. Yep, 30-minute fake out. She took 30-minute fake out, closed bearish, straight back above, boom. Buys there at 1 a.m. London time in that 30-minute flip. 350 ticks. Why can't we get a move like that in London? Can London give us 350 ticks in one 30-minute candle? Like, that's absolutely beautiful. You do an Asia live stream? Yes, we do Asia live streams inside the mentorship, man. Yes, Monday, Wednesday, and Friday. Nice, man. Nice. Good job. Good job, man. Yeah, nice statement, faker. Yeah, it's absolutely perfect trade. And it's one of them trades where it's like, you know, you execute. Did you guys hold until this whole entire 30-minute close as well? Or did you just take it from here to here? Because it's like, you know, you got that trade. Just I know it's hard, especially when you're watching it live, but, you know, just walk away and let this candle close. You come back at this candle closure, you're up like 350 ticks. And we were talking about, I basically said on the Asia market call that I do every single day as well, that I wouldn't be selling gold in Asia today. And I'd be more than happy to miss that move if Asia did sell off. The reason I wouldn't be considering any shorts in Asia today, and again, this isn't hindsight recap, I spoke about this on our market call, is because you have this huge trend line coming down. But not only do you have this huge trend line coming down, you guys who were on fast markets with me yesterday, you also had a great intraday reaction. From where? Previous daily lows. Previous daily lows. You guys got a 52.10. Wow. 52.10 like there? Nice. Diamond hands. Look at that. Amazing. 52.10. That's a great... I mean, 52.10, that's what, about 400 ticks maybe? Yeah, like what? 400 ticks? 1 micro, $400. 2 micros, $800. Man, that's a good trade. Amazing trade. Good job. Good job. Amazing work, guys. I did take some... I actually ended the day down red yesterday. Not a huge amount, but I did end up the day red. I tried to take these buys in London into this trend line. Didn't quite work, so I waited for fast markets. And I took more buys here that did work beautifully. But I didn't size enough on my fast markets trade. Which is my own doing. But when you've got 4,000 people watching, it's it can be intimidating on fast markets. Especially when I'm trying to trade the 5-minute when I'm usually a 30-minute and higher trader. But yeah, if you guys were on fast markets yesterday, this was an absolutely beautiful play. I also emphasized, which I have coming out in a video today, about the importance of these higher time frame levels for intraday trading. Like if you didn't see this level down here as previous day lows, you could have easily seen this huge push down and go, oh, this is going to be a huge sell-off. Let me continue selling this. Why would you not sell here? Well, the whole reason you wouldn't short there is because you're right back at previous daily lows. But not only are you right back at previous daily lows, you're right back at previous daily lows when gold's been bullish for 1, 2, 3, 4 days. Not only bullish for 4 days, but bullish for about 3,000 ticks. So if I see price on an intraday chart come back down to previous daily lows where the candle closed bullish on the previous day, man, I don't want to be a seller down there. I want to be a buyer. So again, these levels here, it is the importance of understanding the higher time frame levels even when we're intraday trading. Because like I say, you can, if we get rid of this, you can be so, so zoomed into this sell-off and go, oh, this is looking great. At this pullback, I'm going to look to get short and I'm going to look for this next leg lower. Well, this is exactly where I was buying on fast markets. I was buying this when most people would have been trying to short this continuation down. Now, why would you not short that continuation down? Because you had an instant reaction of previous day lows. So, we're not swing traders. We're intraday traders. However, it is still extremely important to understand these things, because it can not only save you a lot of losses, it can give you great trading opportunities. Like I was looking back at this last night when I did the Asian market call. We'll look for trades in a second, guys. Gold's just ranging. I'm just breaking it down for you guys. Teach you guys things, not just always look for trades, because it's very important. So I looked back at this yesterday in the Asian market call, and I actually should have been buying here right at New York Open. Why? Because you had a perfect 30-minute morning star where, again, trade location. You don't take every single morning and evening star. You take morning and evening stars at good levels. Well, previous daily lows, when gold's been overall bullish for the last couple of days, there's a great opportunity. Great opportunity. Even if you just played it back up into here. So that would have been absolutely beautiful. I still got my piece, but that would have been, 300 ticks. Huge trade. So we'll see what gold gives for today, guys. Like I say, we have had this. Let me just put my... Again, like you don't want to be marking on every single daily high and low. I get interested in daily highs and lows when you start to come near it and you throw these reversal signs. I'm like, oh, this is a pretty strong reversal sign. Let me have a quick look at my high time frame. Oh, look at that. We're right below previous day lows. That's pretty interesting. Yeah, caught 350 on that. Yeah, nice. I get nervous just with my wife watching me trade. Can't imagine 4,000 people. Yeah, it is. It can be a bit intimidating on fast markets sometimes, but it's more so because I want to trade the 5 minutes so we can take trades together. When I'm trading on my own, it's like, I'm trading 30-minute wave candle closures, but when you're experiencing drawdown, you got to sit there and watch it. It takes real discipline. I did fancy short into previous day low, but missed unfortunately. Yep. Managed to go long. Yeah, see, I was very happy I'm watching gold for a bit of a liquidity grab before buying, guys. Don't worry. I am watching gold. I'll break today's opportunity down in a second, but I didn't care about missing this move down at all. As much as it may have been nice to have shorted it, I was completely okay with missing this move down because I was much more confident that this was going to be the real move that was going to come in. And that was what I was more interested in catching, because that's the trade that follows the overall direction, and that's the trade that buys up into all of my liquidity. The only way I would have shorted gold yesterday is if you wicked out some of this trend line and then cool, then I would have shorted it. But because, like I was saying on the London session, you had this huge trend line coming down, I want to be buying up into that trend line. Well, unfortunately, it took all the way into the Asian session, but it did eventually get grabbed. So yeah, I was more than happy to miss that short yesterday. More than happy to miss that short. Let's have a look. Good morning, mate. Good morning, man. If you just starting with a 50k XFA with 2k drawdown, would you change anything about how you manage to trade until the buffer is built? No. Risk management shouldn't depend on buffer scenarios. So no, personally, I wouldn't. So you have this, you can scale size once you build up the account. I personally don't like to, because I've done it before, and I can almost guarantee you, let's say if you build the account up to $2,000, you're like, great, I've got $2,000, $2,000 buffer. Now's going to be the time I'm going to allow myself to trade more size. I can almost guarantee you this: the time you decide to now trade more size will be the time that you end up losing. And then you go, oh, damn, well, I'm now back down to only 1,000 buffer. Let me go back to reduced size. You reduce your size, you build it up. Okay, cool, I'm back up. I'm going to up the size again. You up the size again, you lose. And you go round and round and round in circles. So I don't really like to mess around with risk management in that situation. So personally, I 1 to 2 micros here on gold's more than enough. More than enough. I don't change size depending on buffers, to be honest, man, because you can just end up getting in a cycle where the good trades are the ones you size down on, and the bad trades usually end up being the ones that you size up on. So just keep it consistent. If I was to look at my personal, for example, I would change my contract size on my personal maybe once a year or twice a year max. Because if I change it too much, then I'm not letting data play out. It's going to give me inconsistent results. You have to let time and data play out enough. So personally, I wouldn't change it depending on drawdowns and buffers. Just my opinion. Not to say you can't or it doesn't work. It's just my opinion. Just what has not worked for me. Have you been in my trade Zella? It's the psychology of the markets. The one time you decide that, you know what, I'm going to push myself, I'm going to start trading bigger size, it'll be the time you end up losing the trade. Then you go, damn, let me go back to my original size. You win a trade, then you say to yourself, oh, damn, if I had traded that same size, I would have been up. Then you go back to trading that same size, and then you lose again. And it's just a psychology roller coaster, which is just completely unnecessary. For gold in London, guys, obviously, we did close tag in previous daily lows yesterday, but we did still close bearish. You tagged highs, closed bearish, tagged lows, held support. So it's I believe gold could have a retracement lower, but what I'm seeing for the London session is potential longs, because I'm kind of anticipating if gold is going to have a bit of a pullback, we will very likely maybe come up and spike these highs before then potentially selling off. So I am looking for longs on gold. Where am I looking for longs? Below these previous hourly lows, into where this nice hourly rejection up here where you actually closed bullish. So I am looking for longs today in London. I'm looking for longs back up into these pre-London highs around 52.30, which is a very nice 250 tick range. But I am wondering if we're going to get a little bit of a liquidity wick lower first, because you have VWAP down here just as well. Well, I would ideally like to be a buyer down there before then we do something like that. So I am looking for gold longs today. Aaron, you think gold could get up the highs at 42.65? Sorry, I made 52.65, man. It's all good. Do I think we get back up to these highs? I mean, it's tough, man. It's tough. Let's see. What do we have? What do we have news-wise? Let's have a look. What do we have news-wise? Because that's going to be a main catalyst. Did we have anything come out overnight? Let me just have a look. We got London Open in about 12 minutes here as well, guys. Let's just have a look. I don't think we have anything scheduled in today. You do have... oh, no, you had Trump speaking overnight. 2 a.m. London time. You already had Trump speaking. Today we have unemployment claims. What have we got here? So, there was some Trump news overnight. Did he say that much? 6 hours ago, tariffs will remain in place. Trump says US is winning so much in the longest ever State of the Union. Trump preference is diplomacy, but won't ever let Iran have nuclear weapons. I don't know. It's... I'm trying to understand what's going on in the fundamental world right now, because it's a bit all over the place. Do I think we'll get back up to highs? I mean, possibly. This was a great reaction yesterday. Like, this was a great bounce of previous day lows. Like, if I look at this on the intraday, like, this looks like, cool, we've had this great push up, we've come down for that big liquidity grab, now we're trying to get this next leg higher to do this. But then when I look on the daily time frame, you know, although we did hold previous day lows yesterday, I mean, it was still a pretty decent bearish body. Like, we closed with a 864 tick bearish body. Like, that's still a pretty strong bearish candle. So, obviously, my bias in Asia was to buy. But now that we have had this huge buy, to be honest, I would be more comfortable staying much more reactive up here. I want to stay very reactive up here, not really think too much. Could we come up the highs? Maybe. Is it a level that I'm going to look to target? Not really. But if I take a trade and it ends up having a big squeeze to the highs, then, you know, maybe I can hold it. It's not really a target that I'm looking at right now. Yeah, literally, also control, yeah. Good morning, Nam. Good morning, man. Silver, yeah, let's have a look at silver. Don't you draw support and resistance levels? I mean, I do draw support and resistance levels, but I can pretty much draw it to show you guys. But I mean, I don't really need to draw on support to see the support right here. I can see it through the wicks. I could draw on support here, but I mean, I can already see it. You know, I could do this, but it's like I can already see it. I just like to keep it clean, understand candlesticks. But I can see that we're at previous support. You can draw on. There's nothing wrong with drawing on. I think if I start drawing on support and resistance here, it just starts to get a bit messy because of this range to the left. Looks pretty choppy. But there is support. There is support right there. Let me just fire up my currency chart here. Have a look what's going on this 5 minute for a second. Any of you guys tuned into me on fast markets yesterday? Had some great gold buys. Some really good gold buys. Yeah, currency chart looks like we can maybe retest view up before going higher. Nice. Still, yeah, trouble. It's not really, you know, support and resistance is something that, you know, I could draw here, you could draw here, and there's no right or wrong answer. There's no right or wrong answer as to I'm right, you're wrong. It's the most important part for me if I'm buying off support is the pattern that I'm trading, as opposed to how I draw the support. For instance, if we were to look at this Asia move, you know, you might have drawn support here. Someone else might have drawn it here. I don't think it really matters. I think what's the most important part is you tag lows and held support and you close bullish. Like that's my reversal pattern off a level of support. There's my long. So it doesn't, you know, it doesn't really matter where you draw it. You could draw it here, someone could draw it here, someone could draw it down here. This pattern is the most important part. So for instance, right now I know gold's at support. Therefore, when I'm dropping down to my lower time frame, I'm looking at the patterns to be able to take the trade. And it like I say, it's very messy in here. So currency chart is just the XAU USD on the Awanda chart. Yeah, okay, yeah, I feel that's a pretty understandable reason to panicked me on Sean. It's yeah, it's a bit all over the place. Silver so jumpy. Let's have a look. Silver. Oh, look at this. NQ had a great move yesterday as well, guys. Guys, remember, you guys who were here yesterday, remember how I said I wasn't selling NQ? Why did I say that I wouldn't be selling NQ? And you guys remember why I said I wouldn't short NQ yesterday? Because it ended up having a great buy. Why did I say that I wouldn't sell NQ yesterday, guys? And I'd be looking for longs. Was this due yesterday on the fast markets? What made you hesitate on that 30-minute morning star? It was the fact that the hourly was still bearish. It was a little bit riskier. And you had news coming out. Yes, exactly, Victor. Yeah, grab the lows. So the reason I said that I wouldn't be selling NQ yesterday, and I said to you guys, don't short this, is because the previous day wicked out previous day lows and held support. So to me, that's a great liquidity grab to be buying this day. Like, I'd be buying this day all day long. And that's what I said yesterday. Again, I don't trade NQ. God, have a nice sell-off here, guys. I don't trade NQ, but this is exactly why I said I wouldn't be selling NQ yesterday. I'd be looking for buying opportunities. For the fact that the previous day tagged the lows and held support. So previous day low, tagging lows and holding support, I want to be a buyer on this day. Same as here. You tag lows, you hold support. I want to be a buyer on the 18th of February. 23rd of February comes down, tags lows, hold support. I want to be a buyer on the 24th of February. So that's exactly why I said I wouldn't be shorting NQ yesterday. It ended up giving a great buy. All the way back up into that weekly opening price, which again, I don't trade NQ, but if you guys were here on Monday, remember how I said there's a very high chance you come all the way back up into that weekly opening price. Why? Because it's unlikely that that's enough of a top wick on the weekly time frame. So liquidity levels played out absolutely perfectly there on NQ. Again, I haven't touched these. This is what we spoke about all week. Spoke about how I wouldn't be selling here, buying up into price needing to come up for more of a steeper weekly top wick. Well, that's exactly what we did. So again, great calls yesterday on gold in Asia. Great calls on NQ as well. Now silver. Look at this for silver. This is for a run on silver. This is a great run. Look at this. Let's have a quick look at gold. So we got London Open in 5 minutes here, guys. If we close bearish, we'll see, because we're still at support. We're still at 52,000. I want to see if we can bounce from here. Let's get rid of these levels on silver. Let's bring this up a little bit. Let's put on 90, and then we'll put on here. Let's put on 85, and then above here, let's put on 95 as well. 95. These are key round psychological levels to watch for silver. So we got 85, 90, 95. Silver again. You guys remember last week talking about buying up in silver into all of this trend line. Most people are trying to short that trend line. We're trying to buy up into that. So we are very close to the highest. Oh, wrong way. Highest point of this trend line. This is looking really nice. But again, look at this on silver. You broke above 85, you held it, squeezing higher. Silver buys today in Asia was also fantastic. Yeah, absolutely amazing. I still think you can see silver squeeze a little bit higher. So silver still has room. Potential 5-minute fake out coming on gold. 5-minute fake out into that Audi close. So silver has room to still go higher. Again, you've already had this amazing push up here in Asia. Look at this great reversal signs. Why would you be buying silver? Well, same as gold. Perfect trend line coming down. Look at these trend line plays, guys. People trying to short these trend lines. You're trying to buy up into these trend lines. This is the big reason I took massive longs on silver last week. This is the whole entire reason. People trying to short these trend lines. You're trying to buy up into it. So amazing. You guys in Asia are having too much fun here. Amazing buys on silver today in Asia. Tag lows, hold support. You buy it here at 12 a.m. London time. You buy it 1 a.m. whichever one you want. Doesn't really matter. You have an absolutely amazing run. Even just to take silver up into this resistance here. Like, that's a great trade right there. An absolutely great trade. So for silver for the rest of the day, I would like to see a bit of a liquidity grab before we look for a run back up into 92s. So potential longs coming up on silver, potential longs coming up on gold. But this is a fantastic run. This is that much of a nice of a run on silver that would it be surprising to see silver create some space for a good few hours? Not at all. So silver you could range, but overall today I would like to see silver go higher. But that's that nice of a push that you could easily range, pull back, and then see if you can go higher. Great run up. Yeah, points at the daily trend line on silver. Yep, that's what I would have. I don't really want to look how much I would have made, but if I'd held my silver long from last week, like from down here, I'd be up like 30,000 right now. Don't check yet. I would have been up like 30,000 right now if I'd held that trade. Crazy. There was a part of me that was really tempted to hold it as well, but to be honest, I was more so wanting to get re-entries. Same as gold. I was really tempted to take gold longs before I went to bed yesterday, but I was like, it's too stressful. Too stressful taking them trades and going to sleep. Yeah, risk the 10k to make a little bit more. Risk more than that, actually. How do you look for reversals? What's your criteria? Reversals is just the morning star plays. Morning stars, fake out opportunities. Like we took these buys on Monday. Morning star play. He had these again. Morning star play here again. That's a bit unnecessarily of a big drawing. And then again here as well. So every single day so far this week on gold, you've had this exact same reversal pattern. Exact same reversal pattern. We took the one that happened in London. I took a little bit of the one that happened yesterday in New York. And this one in Asia was a great push. So that right there, that perfect morning star play, this happened every single day this week. Every single day. Super simple. I have plenty of videos going over this as well. This is that right there is like there's you know, this morning star 270 ticks. This morning star 270 ticks. This morning star 400 plus ticks. There's like almost a thousand of ticks. Buying here, and buying here. That's like almost $1,000 trading one micro. In 3 days of trading gold, it's huge. All right, we've got London Open here, guys. Let's have a look. So, previous hourly candle did close bearish, but we failed to close below the previous candle lows, which is a good sign to see if we can get these longs. Instant top wick though, not ideal. You can do a 30-minute hourly. To be honest, Ben, 30-minute hourly is nice. Like you had this perfect 30-minute one. 30-minute one yesterday. Monday was a perfect hourly one. Today was an hourly one. So sometimes you might have a hourly morning star, but a 30-minute fake out. So here. So this was an hourly morning star, which was a 30-minute fake out. Same as the one today. Today was an hourly morning star, which was a 30-minute fake out. So here, you broke below, broke right back above. 30-minute fake out, hourly morning star. Broke below, right back above. 30-minute fake out, hourly morning star. See? This is the one we took on Monday as well. The two like perfect opportunities. So there's the reason I didn't take this 30-minute one yesterday here in New York. The reason I didn't buy this 30-minute morning star was because this hourly still closed very bearish. So if the hourly closes not only bearish but 500 ticks bearish, then I want to see an hourly turnaround, and then I'll take the trade. So that's why I didn't take that 30-minute morning star yesterday. I was more than happy to take it on the open of the hourly, where I got long on gold. For you guys who were on fast markets yesterday, something like this. You guys were on fast markets. That's the long I took yesterday, based off that 30-minute morning star and hourly fake out. Gold getting a nice squeeze, guys. Like I say, I want to buy gold, but we're opening with an instant top wick. An instant top wick. So what do we have here? We're going to go a bit of resistance here, kind of holding a little bit of support here. It's a little bit choppy in here. It's a little bit choppy. A little bit choppy. When you look at the currency chart, good question. Is sometimes you get more liquidity grabs. Sometimes the futures could hold a double bottom. Sometimes the currency chart grabs it. So I have a currency chart on my other screen, and it's just a naked chart, just clean price action, just a have a clean understanding. There's no analysis on this chart. It's just a completely naked chart to look at price action. It's basically just to use multi-time frame analysis. Like I might have a 5-minute here, but then on my current chart, just a 30-minute. But if you just want to use just future charts, it doesn't really matter too much, to be honest. Yes, Nvidia earnings today. Yes, that's a good point. Nvidia earnings today, I believe, after market close. I believe. Pretty sure Nvidia earnings are after market close today. But yeah, if I was looking for more trades on NQ today, again, it's pretty tough because now you're buying at resistance, whereas yesterday you'd be buying at support. But I would say, yeah, NQ to continue squeezing up into 25,140 looks nice. That would be the next range I'd be looking to play. But if I was wanting to be a buyer on NQ, I would have been yesterday. But I would have been buying here. 3 o'clock. Great buys. Here, good range. Let's have a look, guys. Let me see. Is Asia the next candle after the morning star opened immediately with the top wick? So I felt I couldn't participate. Jassas, which you mean this one here? This one? This opened with an instant top wick. Again, it doesn't. Gold. If you're looking for longs on gold, it doesn't have to come down, create the perfect bottom wick, and then just rip. Like, it can come up, it can come down, it can come up. It doesn't really matter too much. If you wait for the perfect bottom wick and then try to get long, then you're trying to refine too much. You're overthinking it. If it was as simple as we tag lows, the hourly comes down like this, and then we buy, and then we get this perfect wick rejection, and we take longs. Like, I mean, it'd be fantastic. Our life would be extremely simple, but it's not that easy. It also doesn't really need to be. You don't need to overthink it that much. If the bottom wick happens first, great. It can definitely give nice opportunities, but it doesn't have to play out like that. I think if we wanted it to play out like that every time, you would miss a lot of opportunities. A lot of opportunities. As long as you're in from the open of this candle, you're risking below that liquidity low. Fantastic. I would just want to be in the trade. Because sometimes you can over refine and try and have the perfect entry with the perfect bottom wick and the perfect stop, but guess what? You chase perfection, you miss easy trades. So I wouldn't overthink it. The only I know you said there, felt like I couldn't participate. What would tell me to not participate is a closure back below this level. But when this candle tags lows and closes bullish, I'm in this all day long. Until you close below this level, I would be buying that all day long. No thought process. Just take the trade. If it comes down for a bottom wick, cool. Maybe you get a re-entry on the lower time frame. But as long as you're in from the opening of that body, it doesn't really matter too much. It was a really, really good run. Yep. Exactly. Even if it did, then that next hour was also fantastic. Say if you didn't get it from there for whatever reason, maybe you wanted to see a little bit more. Well, take the next hour after you had that 30 closure above this one here. Like, that was nicer as well, because then you closed back above this area, so you also could have taken it from there. You can take either or, but I personally wouldn't overthink that much. I think if you don't take a trade because you didn't get the perfect top or bottom wick first, you would be trying to predict and overthink a little bit too much. Like I say, it would be amazing if it was that simple, but yeah, unfortunately it's not always the case. Goldie, like I say, guys, I am looking for the longs. However, this hourly is open with an instant top wick, so we could squeeze lower a little bit more. There's no bottom wick on this hourly, so this hourly could maybe come down a little bit more and then start to re-break back higher. So I am looking for these gold longs, but not here. It's looking a little bit messy. A little bit messy. Which, again, is it surprising? No. Why? Because Asia had a great push. So London can range a little bit. That's okay. Look at this. Look at this clean run in Asia. How much are we up in Asia? Yeah, 800 ticks. Is a range surprising? Not at all. Not at all. Yeah, I do trade silver. Absolutely. One of my best trades this month has been on silver. I have a breakdown coming today of the exact reason how I use higher time frame to analyze intraday opportunities with a live silver example from last week. Do you average down your trades? Not really, Ben. Not really. Not really. It depends on the setup, to be honest. If, you know, kind of like the New York setup yesterday, I sized down on that trade because I was already a little bit red on the day and gold already had a big sell-off. So this trade I did size down on, and I was happy just to make back some of the loss from London. Yep, be on YouTube, yep. There was already a trade breakdowns in Discord as well. So yeah, maybe if we get a little bit of a wick lower, start to break out, I would like to still buy gold. Remember, we haven't quite yet retested that V up, which is starting to flatten out a little bit. Silver as well, like I say, I do like silver continuation longs up into 92s. But if I'm going to be a buyer on silver, I wouldn't be a buyer here. I'd want to see a bit of a liquidity wick before being a buyer. So I would look for longs on silver below 6 a.m. candle lows. Below 6 a.m. candle lows, maybe a retest of this previous breakout level. Again, you have to look at this from a neutral perspective. What have we just done here? We've had a huge push up. We've ranged. We've had a massive leg up. So what could we now do? Are we just going to keep ripping? Well, I mean, it'd be great if the markets move like that, but we move in impulses. We range, we move up. You could easily range before then, maybe moving up later on. It's unlikely that Asia's going to have a massive push. London pulls back and then just keeps ripping. It's unlikely that that's going to happen for London. So when you see these bigger moves in Asia, yeah, the patience has to pay in London. So if I trade London today, I'm looking for a range play. I'm not looking for a huge trending breakout trade. Why? Because it's already happened today. Same as kind of what happened on gold yesterday. You know, you had a great sell-off in Asia. Amazing sell-off in Asia. So what did London do? London ranged. And then what happened coming into pre-New York? Market continued selling off. And then right into New York Open, bounce back higher. So could we be looking for something similar today? Very likely, very likely. Again, I'm not saying I can't, I won't or can't trade London. It just says, just requires me to be a little bit more patient. A little bit more patient. Remember, you know, even if we look at the trade on that we took together on Monday, we took the trade on Monday at 8:40. We waited an hour and 10 minutes for that trade. It ended up playing out perfectly. So we waited an hour for an absolutely perfect opportunity. It was absolutely worth the wait. Hey Aaron, hey man. How many trades you take? Have you taken this month in total? This info will help a lot of beginner traders who overtrade. I would say I have probably averaged one a day. Personal account, I've taken a lot less. So last week I traded. Monday, Tuesday, Wednesday, Thursday. Didn't trade Friday. Week before that I traded every day. Week before that I traded twice. This week I've traded Monday and traded yesterday. So again, it's just as always, 1 to 2 trades a day. More than enough. More than enough. I did see, if you saw, Dakota put up a post yesterday. Dakota's post was amazing. Let me see if he shared it on X. I don't know if he did, but let me see if I can get up Dakota's post. Because Dakota has taken a lot less trades than me and is up very well. Let's have a look. Where's Dakota's chart? Where is it? Yeah, here. Look at this. This is Dakota's trades. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Like 11 trades the whole time out. Like that's impressive. Up 76,000. Like that's amazing right there. And that's why I always say less is absolutely more. Absolutely more. 1 to 2 a day is more than enough. Like I say, my personal last week, I have that video coming out soon. I go through my personal live brokerage accounts, going through the trades as well, so you guys will see that. I'll post it when it comes out as well. Biggest size trade you've made? Trading 10 contracts. We were trading 10 contracts maybe like 2-3 years ago on gold. Because in London session, you were moving like 30 ticks. If you got 30 ticks in gold, like 2 years ago in the London session, that was a great trade. Whereas gold now is we're spoiled for choice. We're moving hundreds and hundreds of ticks. So if you go back to watch some of my streams from, I don't know, maybe a year, 2 years ago, I was trading 5 to 8 to 10 contracts on gold. Because if we got like 30 ticks in London session, I was like, oh wow, that's like a good trade. Whereas now on gold, we're getting hundreds. So the past like year and a half, I've sized down, which is crazy. Usually traders, for my whole entire career, we size up. But with how much gold's moving, I've been sizing down. It's usually, which is like the complete opposite. But the markets have gone from, like I say, moving 30 ticks in London to moving what's today up in Asia, which is just unheard of a couple of years ago. A couple of years ago, what's this in Asia? 900 ticks, like it's insane. Absolutely insane. That 3 years ago, you never would you see a 900 tick move in Asia. You'd be lucky to see 900 ticks in the whole entire month. Whereas you're getting it in one session now. It's insane. Look at time and sales while trading. No, I don't, man. No, I don't. This is what I look at right here. What you guys see here is exactly what I look at. Sizing up with 2 micros. It's crazy, man. It's crazy. That's the thing, like, you know, you get half that move. You get 300 ticks on gold. 1 micro, $300. 1 mini, $3,000. Like these moves are just insane. 10 minis, 30,000. Like it is crazy how much gold has gone from not moving that much to literally moving hundreds and hundreds and hundreds of ticks. Gold just ranging, guys. We're just hanging out, waiting for some movement. Like I say, I am looking for longs on gold. I also do like longs on silver, but silver needs to come down lower. I would prefer to buy gold than silver today. Why would I prefer to buy gold than silver? Well, because gold has had that liquidity grab. But my only concern with gold is, the reason I'm not jumping in and out of positions right now is because we broke above this resistance, we held its support, we closed below. Well, where's our next level? Right here. So to me, this is a very, very messy no trade range. We get back above, cool, I'll buy gold. But you get back below, then maybe you short gold for a bit of a pullback into this area, back down into the 80s for a big inverse head and shoulders before then seeing that next leg higher. So it's a kind of make or break level right now. I would like gold to pull back, but if we're going to see gold pull back, I would like to see something like this. That's why I'm trying to look to buy London into that manipulation before then going short. But the nicest, like I say, the nicest trade today was that great London, great Asia push. Which if you guys in Asia took that, you should be locked out, done for the day. Lock the account out. Trade a combine, trade a different account, or just don't even look at the markets right now. Where's Bitcoin at? Where's Bitcoin at? Bitcoin was having a nice sell-off yesterday. Where did Bitcoin get down to? Bitcoin on the spot chart got down to 62,500 yesterday. I would like to buy more Bitcoin, but if I'm going to buy more Bitcoin, I would like to buy below 60,000 on the spot chart. I think we see Bitcoin manipulate a little bit lower. Where are we? Bitcoin here. I think if we're going to see Bitcoin have a decent pullback up into 80s, I would say you'd probably do something like this. Come down, tag lows, squeeze out any early buyers, and then see if you can get that retracement. So I do have alerts set on Bitcoin around 60,000. Again, I don't day trade Bitcoin, but as just an overall outlook for some good swing opportunities, that's what I'm looking for. Took the gold in Asia on the hourly, but closed at break even on the 30-minute top wick. Which one did you have, Mikey? Which one, man? Did you buy this hour? Yeah. if you did get stopped out here, break even. I mean, I would have. There was definitely a re-entry. There was definitely a re-entry. As soon as you see that hourly close like this, holding support, I'll be buying this hour all day long. Was not for, yeah, fair enough, man. Yeah, that's fair enough. But yeah, again, to be honest, like when the hourly grabs lows and holds support, I wouldn't even really be refining on the 30 minute. I would just take the trade and just walk away, see how the hourly candle closes. As long as it doesn't close below support, you just want to be in that trade. You just want to be in it. As long as it doesn't close below support. Again, that's why sometimes, you know, you don't even need to refine on the 30 minute. If you have that hourly confirmation, it's like, you know, sometimes you just got to take the trade and walk away. It was a really, especially more so when you have such amazing upside liquidity targets. When you don't have as clear as day liquidity targets, then yeah, maybe you want to manage more aggressive. Like right now on gold, there's not as clear of liquidity targets as there was here, so I'll manage more aggressively. But when you have this clear as day trend line, it's like, yeah, I want to let this trade breathe and just hold it. I want to hold that trade till it closes back below against me. I want to be in that trade. Is trading metal safer because they respect technical analysis? It's not this necessarily safer. I wonder if I can get a fake out here on gold. Like I say, I want to buy gold, but this hourly is open, no top wick and squeezing. It's not necessarily that it's safer. The reason that I prefer trading metals as opposed to NQ, I just find it much more consistent. I find gold respects price action very, very, very well. And it's respected the same patterns for as long as I've been looking at gold. So, you know, NQ follows same principles. You know, we called NQ longs yesterday, not shorts. So it follows the same principles, but I just feel like intraday trading NQ is just much more aggressive. Like you can get just, you know, you're looking for longs up into these weekly highs, which is what we spoke about. But you get these huge whipsaw price action that if you're watching this on the 5 minute, you know, you can just get so manipulated that, you know, you have a huge sell-off. You tag lows bullish, you all of a sudden straight back up, and it's like, yeah, I just feel like with NQ, you have to be much more aggressive. Whereas with trading metals, I feel like it gives me enough time to make my decision. And much more candle confirmation, which is just the reason I like trading it more. Yep, exactly. Yeah, gold is just gold. Yeah, exactly. Yes, and NQ are, yeah, exactly. Composite of a lot with Nvidia pulling very heavy on NQs. Yeah, exactly. You know, relying so much on so many different stocks and so many different factors. Whereas, yeah, like you say, gold's just gold. I don't correlate gold to anything. Gold's just gold. Silver's just silver. They just respect technicals a lot better. So on that hourly morning star play, would you close the trade on any bearish hourly closure, even if it was still at support? As long as, let me see here, as long as you don't close below this support, yeah, I'd want to be holding this trade. If this candle wicked highs and closed bearish, then yeah, I'd probably close and wait for the next hour. But as long as we hold below this support, yeah, I'd want to be buying that all day long. All day long, man. Yeah, as long as you don't close below, I'd want to be a buyer. Yeah, like I said, if this candle wicked out the previous highs and closed bearish, then I'd say, okay, cool, we're tagging lows, we're tagging highs, let me just wait. But the main reason for buying isn't this morning star. The reason we're buying isn't this morning star. The reason we're so confident to buy gold in Asia today is because this huge trend line. Because that's where we know that most people are trying to short that, while we're trying to absolutely run up into that liquidity. So yeah, that's the most important part for this trade. It's not the morning star. We have our confirmation and our direction for a trade. The morning star is just the entry pattern. So we have our direction, then we have the entry pattern. So clear liquidity targets, that's that morning, that's the trend line play. Morning star, just the price telling us now it's time to get in to our thought process of direction. Why did you move from swing trading to intraday trading? Good question, man. I moved to day trading during the 2020 crisis times, where swing trading was just incredibly uncertain and very, very hard to trade. So during that time, when the markets were all over the place with all the news that was coming out during 2020 into 2021, it was very, very difficult to swing trade. So then I just started adapting my plan back down into the exact same plan I used the higher time frame, narrow it down to the intraday time frame, and then I was just actually enjoying that a lot more. I still like both, to be honest. I do really like both. I don't really have a preference. What I do like about day trading is if I get my one and done, I'm done for the day. I don't even have to think about the markets. Like the trade I took on that we took together on Monday. You guys who are here on Monday, what was the buys we took on Monday? Here, sorry. Trade we took here on Monday. I take this trade in Monday in London, I'm done for the day. Don't even think about the charts. Don't even, not a thought process. Whereas for swing trading, you do not only have to check it a lot, but it's on your mind a lot. And it can, it's all well and good saying, you take a trade, you hold it for a couple of days, and you close it, you make money, yay. But it's unfortunately not that easy. I could hold a swing trade for a couple of days and it comes right back down to break even, and that is mentally tough. Again, day trading is also mentally tough, so we got to pick our tough. And for right now, this present moment in my life, I like to be in and out in the same day. I feel like when I get to a stage of being, much older. Gold having a squeeze here, guys. No bottom wake. It's hard to move to buy this. When I get much older, I would like to day trade still, but I'll probably day trade less and swing trade more. I think NQ respects technicals pretty good. Sure, it's a really, really volatile time. Might sweep levels. Yeah, that's good. It's just preference, man. There's no right or wrong answer. I just find for my style of trading, gold respects it better. But what I might find respects better, you might find otherwise. There's no right or wrong answer, man. To me, gold is much more consistent in the way that I like to trade, so that's why I prefer to trade it. But it's not like this is exactly how the markets move. Like, that's what a lot of people have. Like, not you, man, but a lot of people in trading have opinions like, no, this is exactly how the market moves, and this is better, and that's wrong. It's like, well, it doesn't really care. It's just whatever you find works best for you is what's the most important for me. My technical trading, price action, I find works better for gold. But you can see, the same principles work on NQ. Like again, I said why I wasn't selling NQ. But yeah, I just find gold more consistent personally. Don't get me wrong, I've had great trades on NQ. I have days where I could have great trades on NQ, but then I have days where the bad days on NQ are really bad days. Whereas my bad days on gold aren't really that bad. Whereas bad days on NQ can be really, really bad. That was just my findings anyway. But like I said, there's no, it's not, this is right, that's wrong. It's just, you guys got to test to see what you find best. I've traded a lot of markets, and for me, gold is fantastic. Yeah, that's still good, Ben. That's still good. 300 on Monday, lost 220 yesterday. Yeah, that's good though, man. It's good. I'll take that, Carl. I'll take that. I'll take that. Yeah, what I'm looking for here on gold, I'm watching this 5-minute chart here, is we are creating a bit of a double top up here. Look, we're creating a bit of a double top. So if we can pull back, there's potential for a small scalp. Nothing big because you're playing a 50, 60 tick range. My only concern with gold is like I'm going to end up trading a 50 tick range when, I saw this couple of 100 tick move up here. So it's like, do I want to catch the scraps of the markets when you've already had these clean moves? Not really. Not really. I do still swing trade, just a lot less for gold. If I swing trade now, it's mainly stocks. Yeah, true. 66 in the mini is good. Yeah, true. Well, mini $600. That's a good point. That's a good point. Having a little bit of a squeeze lower here on Goldie. If you can pull back, there is the potential for a long into this 30-minute open, because this 30-minute is now going to reclose back above. Again, it's not the cleanest, but we have gone from closing bearish to closing back above with a nice little target. Is it the biggest trade? No. It's not the biggest trade. It's not the cleanest trade either. But we are trying to get back above. Let's see this 30-minute close in 2 minutes here. I think sometimes we can be so zoomed into this 5-minute. You'll be like, oh, it's nice liquidity grab, we'll break it out. But it's like, let's just zoom out and breathe for a second. Range, 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 range. You can try and trade in here. You can get chopped up. You can get frustrated. Or you can say, you know what? This is my range. Let me just wait. Well, we can do the same thing here right now. No need to stress. No need to worry. No need to overthink. All we do is wait and react. That's all we do. Wait and react. React to the markets. That's all we're here to do. Would you buy the 30-minute morning start at 2 p.m. yesterday, or would you wait for the hourly close because we had a big sell-off? This one here, yeah, I took this trade, man. I took this trade on fast markets, but yes, I waited for the hourly close because this hourly candle was very bearish. It was a 520 tick bearish closure, so I wanted to see an hourly turnaround. So when this hourly candle tags lows and closes bullish, this is where I was buying on fast markets on the 5-minute. I was buying here on fast markets on the open of the next hour. And I was also explaining this live as well, and taking it live about how that higher time frame is so important. So yeah, I didn't take this 30-minute morning star. I could have, but I didn't want to just because of how aggressively we had sold off. That I'm like, rather than me trying to catch lows and quote unquote take a sniper entry to fuel my ego, I'm like, let me just let the market show me something first. So I was like, you know what? Let me just look at this hourly time frame, see how this New York open candle is going to close. Well, we tag lows, we close bullish. Fantastic. That's the market's confirming. Previous daily lows are going to hold. Now I'm going to buy. So yeah, I didn't take the 30-minute morning star. I waited for the hourly candle closure. The reason I didn't wait for the hourly closure when we took our longs on on Monday, is because you threw more nice signs of support. So nice support, cool, I can buy this hour on the 30-minute. But because this closed so aggressively bearish, and at that point, you know, the highs from Asia back down to, you know, gold was down 1,600 ticks. So I was like, if I want to buy against a 1,600 tick move, I want to see at least an hourly candle close to confirm. Do you ever miss trading USD, JPY, any forex pairs? Honestly, not in the slightest. Honestly, not. I do not miss forex trading at all. Not at all. Yeah, I'm so relieved to not be trading currencies. Yeah, I don't miss trading currencies at all, man. Again, not to say you can't, but no, for me personally, I absolutely don't miss trading currencies. No. It's like I said, there's nothing wrong with trading currencies. But for me personally, they're so slow, and yeah, deal with the spreads. I just find gold is just so much nicer to trade. No, I don't have that account anymore. No, I took some decent pairs and I lost that account. I don't trade them anymore. I just trade on Topstep here, man. Just on Topstep. USD yen is not really one I ever really traded that much. I did trade pound yen, but you know, if I want to trade pound yen, it was like, well, I can just trade. Can you? Where are we? You can still trade the yen. Yeah, you can still trade currencies here. Like if you want to trade Euro USD, where you trade the euro. You want to trade the Australian dollar against the US dollar. Well, come here, 6A Australian dollar. So you can still trade currency pairs if you want to. If you want to trade USD yen, well, you could either trade the euro, or you could trade the yen. But me personally, I honestly, I don't ever look at these markets. I just like the way that gold just gives such clean opportunities. There's a nice sell-off though, to be fair. Look at that. I haven't looked at the yen in a good while, but that's a nice sell-off here today. Short into previous day lows in the yen. Pretty nice. Again, you guys who like trading Euro USD, you want to move to futures. Cool. 6E, Euro futures. Euro against the US dollar. Great trades. This is the last time I looked at the euro, back in December. Look at this. But no, I don't miss trading them at all. Even for, I never really day traded currencies that much. It was mainly it was mainly swing trading. But even still, no. We've had great trades on currencies. But I would always find when I was looking at currencies, I'd be looking at about 10 different pairs, and I would end up just missing so many moves because I'd be focused on way too many things. Whereas for me now, I come on, I know exactly what I'm going to trade, I know exactly how I'm going to trade it, and I know exactly how much I'm going to risk. There's no thought process. timeout still. Yeah. Nice. Still scrubbing the enemy. Yeah, no, I don't. Yeah, I don't miss currencies. So we just had that 30-minute close there, guys. So 30-minute did close nice and bullish. If we get a pullback here on gold, I am trying to see if we can get long. We've had a pretty decent 30-minute fake out, and I do believe we're probably going to see this hourly fake out. Which, if we see this hourly fake out, then great. We may have buys at 9 AM all the way back up into these highs here. So let's see if we get a bit of a pullback here on gold. Maybe we'll buy. It's a nice 5-minute tag lows, close of bullish. Could you take it from here? No. Why? Because if you're risking down here, you'd have to manage as soon as you hit that double top. I'd like to see a little bit of a deeper squeeze lower to see if we can take this. Patience is paying here on Goldie. Patience is paying. You guys yeah, exactly. Yeah, spreads are huge. Exactly. You guys on YouTube, the video is now live talking about the silver trades from last week. Same as you guys on Zoom if you want to watch it. That's what I was talking about before, about understanding higher time frame levels for intraday trading. It's very, very, very important. So same as what we were doing yesterday explaining fast markets. Why was I not shorting here on gold when most people would have been? Higher time frame levels. So if you want to understand a bit of the higher time frame strategy for intraday trading, it's a very, very, very important watch, guys. A very, very, very important watch. Again, I show my live accounts and trades for the week and month as well if you guys want to check it out. Oh, give us an entry code. I want to be in this Goldie, but we just hourly, just close bearish, open, just straight back higher, right back into hourly highs. So I'm not really too bothered about missing this move. I'd like to be in it, but I'm not really too bothered. It's not the cleanest. If I look at this move here compared to the longs that we saw in Asia, is this cleaner than this? Not even close. Not even close, so there's no FOMO here for me. Still just in a bit of a mess. Silver is one that I prefer for longs. Again, silver, look at this hourly time frame. Close bearish, straight back higher. So hourly fake outs potential on silver. As long as we don't grab these highs, in the next 30 minutes there could be hourly fake out longs in silver back up into 92. 92. In longs from 52.02. Nice. Down here, nice. That's nice. Great entry. That's a great entry, man. Did you get long like on the below previous hourly lows? Just a bit of a wick. Once it wick the lows, you get long like around there. Hourly highs is a pretty decent trade from in terms of a tick amount, man. That's a 135 tick trade. That's a very nice trade. A very, very nice trade, man. Remember, there's no bottom wick on this hourly time frame. Doesn't have to be created, but it could. Yeah, jealous. I'm jealous as well, man. Thanks for streaming. Thank you, Mikey. Appreciate it, man. Appreciate it. Patience in London by the looks of it today, guys. But like I say, is it a surprise? No. Why? Because Asia had a great move. A great move. In terms of what could we see into New York today, I kind of have to see how price develops, to be honest. You know, yesterday we jumped on clear as day liquidity targets. Cool. Easy bullish bias. Today it's not as clear. Today it's not as clear. We are at $2. There's a... I was going to say it's a coffee, but in this day and age, is it a coffee? Probably not. It's not even a coffee at $2 these days. We're not even up a coffee on the day. Silver breaking higher. What's NQ up to? NQ longs looking good there, guys. That 30-minute breakout NQ looks much nicer than gold and silver. NQ longs look pretty nice if you trade it. Gold having a nice squeeze here. Real shame. Like I said, I'd like to be in this, but there was just no setup for me. No setup for me right yet. Let me just have a look, you guys. Where are we? let's see what we got for the day. Yeah, I'll be back on fast markets next Tuesday as well. For you guys who tuned in yesterday, I'll be back again next Tuesday. Next Tuesday at the New York Open. It was a really good stream yesterday as well. If you guys didn't watch it, worth going back for a watch. It was a good session. Well, that's what I'm wondering. I'm wondering if, you know, if London keeps squeezing gold higher, do we find some resistance above these previous hourly highs and sell off? That's what's very possible, because you do have this sort of left shoulder head come maybe back down for that right shoulder if you grab these highs. And if we look at the daily bias, you know, what's the daily bias today? Well, it's not really that clear, to be honest, because you tagged highs, you also tagged lows, but you did also close bearish. So if I had to give a say on a daily bias today, it would be very neutral. It would be very, very, very neutral. And if we look at this on the 5-minute right now, it's like, yeah, we're creeping higher. It's like, you know, we do have a bit of a trend line coming up here. Could we manipulate that lower? Maybe. Nothing is jumping out at me just yet, guys. Nothing's jumping out at me right now. Which again, like I say, it's okay. Sometimes you jump on, it's clear as day. Like yesterday, charts clear as day. Easy long bias. Screams at me to buy gold. Screaming at me to buy gold in Asia. Is anything screaming at me right now? Not really. Not yet. But again, does that mean it's not going to make sense the whole entire day? Of course not. We got time. We got time. Can see silver squeeze into daily highs at 9.2. Yes, I much prefer silver longs than gold longs, actually. Silver, you have that perfect upper point of the trend line here. Yeah, silver longs into that 92 looks much nicer than gold. Again, if I want to buy silver, I don't want to be a buyer this high. If I want to be a buyer on silver, yeah, I want to see a pullback, so I want to be a buyer at support. Again, here, you buy in Asia. Where are you buying? You're buying at support. I don't want to be a buyer up here. Would I want to be a seller up here? No, I really wouldn't. You're a good teacher, Aaron. I enjoy your streams. Thank you, man. I appreciate you tuning in. I appreciate you being here. And so I'm trying to, even though, you know, if not jumping in trades left and right because London's ranging, you know, still want to teach you guys and show you guys something. I'm here to bring you guys as much value of the plan as I can. Talk about the opportunities that were there in Asia. Talk about why it's not as clean right now, and that's what it's all about, man. That's what it's all about. So if I want to be a buyer on silver, I want to see a bit of a liquidity wick before we push. I will not chase this high because my risk to reward from here is massive. Where would my risk be? Where is the last liquidity gap? Well, ages away. What would make this trade invalid would be a closure back below 90. So therefore, my risk is pretty big for not that much reward. Yeah, 100% Sean. Yeah, it really has been. For London Open, it really has been. It's because you guys in Asia keep taking all the fun. You guys in Asia keep taking all the moves. But it's also, yeah, that's why I always still like jumping on you guys, because it's very easy to see when you should be trading and when you shouldn't be trading. And that's, you know, that's the most important part of trading, is knowing when to pull the trigger and when to sit on your hands. When do I want to pull the trigger? When I got clear as day targets and decent hourly confirmation. When do I want to sit on my hands? Times like this. When do I want to sit on my hands? Times like this. Yeah, wait, pull back into a VWAP before buying. Yeah, I kind of like that idea, to be honest, man. I like that. But to be honest, if we're going to come back down into VWAP, I would be open to shorting it. I would be open to shorting it. I mean, which is still good, David. Exactly, yep. In Asia, I make money. In London, I learn to sit on my hands. The hardest thing for me, yep. It is very hard to sit on your hands, but it's also like, you know, obviously we're trading here together, so I'm happy to sit here and watch it. But whenever I'm not on stream with you guys, you know, it's very easy for me to see if there's an opportunity to trade this current hour. And if I don't see an opportunity to trade the current hourly candle based on the previous hourly candle close, I'll just walk away for now. It's very easy to sit on my hands when I don't need to be there watching it. Like if I know there's not going to be a trade in this hour, well, I'll just walk away for an hour. Like let's say if, for instance, this current hourly wicks the lows, wicks the highs, doesn't close above or below, guess what? I'll do at 9 AM. I'll walk away. I won't even watch it. Because if I watch it, the market's going to test me. The market's going to get me to jump in a position that I really know I shouldn't be in. So the best thing I can do is just not watch it. You're never going to miss anything. Gold's not the type of market where if you're not sat there watching it, it's just going to rip without you. That's not how the markets move. We tag lows, we hold support. There's your confirmation. There's your trade. You tag lows, you hold support. There's your confirmation. There's your trade. Tag lows, hold support. There's your confirmation. There's your trade. So gold really doesn't move as fast as we think. So, if you don't see anything presenting right now, just walk away for an hour. You come on at 10 AM after 9 AM candles closed. Have we broken above or below? No, cool. You walk away. If we have closed above, cool. Now I'll sit down and actively start looking for positions. Because if every time you come onto the charts, you're always actively looking for trades, you're going to mentally burn yourself out. Hardest part is not seeing it. I'll even come back 15 minutes later knowing that the candle still hasn't ended. Yeah, that's one thing to get good at is, one thing I'll do throughout the day, like I'll look at my phone, I'll go, okay, cool. Right now it's, let's say London time, it's 8:44. Okay, cool. Well, if I wasn't on with you guys, I'd say to myself, well, I can look at the charts now, or I can come back in 16 minutes and see how the hourly candle's closed. So, know when to sit down and jump on the charts and actively look for positions, and know when to actively walk away. Remember, you guys got into trading for freedom. If you got into trading for freedom, but you can't bear to not be on the charts 24/7, you are going to struggle massively. Massively. You don't need to be in multiple trades multiple times a day, every single day. Because if you are, there's a high chance you're going to get burnt out, and at some point you're going to blow up. I am more than okay with not watching the charts. Like yesterday in London, after I took my loss, I just didn't watch. I walked away for like 4 hours, waited for New York, and then took another trade. Trading shouldn't be so stressful that you're always sat here stressed, anxious, looking for trades. You sit down when there's a clear opportunity. When do you know when to sit down when there's a clear opportunity? When you have hourly or 30-minute confirmation. Not 5 minute. Not 5 minute. That was a huge trade. Look at that, man. That was a huge trade, man. 1 minute as well. Great trade, man. That was a massive trade. 1 minute morning star. Look at that. Impressive, man. Impressive. I'm trying to fix my psychology. I turned to basics and trying to pure mechanical setup for at least 20 days. When do you think I can turn to reading price action like before? I'm not 100% sure what you mean. You're trying a pure mechanical setup and then to turn back to price action. I'm not 100% sure what you mean, man. Sorry. I don't really know what you mean. I don't know what it means to trade purely mechanical for 20 days and then go back to reading price action. What reading price action could also be mechanical if you want it to be. Have you a preferred trading session to trade? Yes, Asia that I can't trade. Asia's been having all the moves, but I can't trade it. But no, I don't really have a preferred session to trade. Gold is not really the market that relies on sessions. Gold is the market that if you're at a good area, gold will have a move. You could see gold move at 9 AM London time. You could see gold move at 11 AM London time. You could see gold move at 5 AM London time. If I had to give a session, I would say 12 o'clock London time into pre-New York, you can get really good trades. But you can also get good moves in London. It's always just based off the hourly time frame. Like we had a great trade in London on Monday. Right at London Open, great trade. Yesterday in London, didn't really do too much. Well, why did you not do too much in London yesterday? Well, because Asia sold off 1,000 ticks. So why was London nicer on Monday as opposed to yesterday and today? Well, you didn't have thousands of ticks of movement in Asia. Therefore, the markets are going to range for London. Let's say if London, had a massive sell-off. Well, guess what? Then New York's probably going to range. So it's not really depending on sessions. It depends on how much gold has already moved. So if you jump on, Asia's moved over 1,000 ticks. Doesn't matter if it's London, doesn't matter if it's New York, you're going to range. You're going to range. Yeah, pretty much, Sean. Pretty much. This is why we have we just got gold ranging here, guys. We're just hanging out. I'm not jumping in longs. I'm not jumping in shorts. I'm really just staying patient, following the plan. Following the plan. Let the markets come to me. All it takes is one hourly candle closure to change everything. One candle can change everything, guys. YouTube, guys, I will wrap up there, guys. Been on for about an hour and 20 minutes. The markets, unfortunately, are right back in the exact same place where we jumped on. But like I said to you guys, it's no surprise when we have seen gold move so much in Asia. And if you guys were here yesterday, we spoke all about these gold buys yesterday and also took more gold buys on fast markets yesterday. So for now on gold, my liquidity's been hit. Asia's already moved like over 1,000 ticks. The only thing I can do right now is sit on my hands for at least 1 to 2 hours. And then guess what? In 1 to 2 hours, I might jump on it. It might make more sense, but we'll wait and see. But what I don't want to do right now is start forcing trades and start revenge trading because I want to scratch the itch. I want to sit on my hands and know when to not trade. So all I'm going to do, guys, I'm going to walk away for the next hour, come back at 10 a.m., see if there's a trade. If not, do the same thing again for the next hour. So I'll see you guys same time again tomorrow. Trade safe, guys. I'll talk to you guys soon. Cheers, guys.